is this one here. Now you might say, why is that one there? Because I can see that there's value divergence. It's not the leader because it's already led, and that's not a trade. If the blue line's going up, that's not a trade. I've got to make sure I've got that this isn't just a leader. So when I see the value evolving here, I say to myself, you know what? I can take advantage of that. I'm going to buy that value. I'm going to buy that value. And that's what you buy when you're buying a bond. I'm buying that blue line. When I see this spike lower, I can see quite clearly that there is quite a sizable value developing, but I've got to be careful that this isn't a massive lead into lower prices here. But if I'm going to do anything at that stage, I'm going to be looking at that and saying, I'm going to get out of that bond. I'm going to sell that bond because this is now terrible value. Remember, the whole point about bonds is retaining that value. It's very similar to that NASDAQ trade I showed earlier. The NASDAQ trade I showed earlier, the reason why it was such a blooming good trade was because we held the value for a long time. That blue line value was still in place for a very, very long time into the open. And when it accelerated here, we lost the value. We knew that at that stage, we could start looking at the possibility of buying the NASDAQ off the lows because we've lost all the short value, all of it, massively at that stage. Well, this is what this shows us, isn't it? If this blue line stays up at the top edge, I retain value on that short bond trade, long bond trade, and I can keep buying bonds. I just can keep buying bonds anywhere. And I know I'm making money. I can buy them at top edges. I can buy them at bottom edges. It's not about where the price is. It's about how much value I get from my price. One day, sometime soon, everybody's going to get that point. I can buy anywhere if I've got value in the charts. I don't need to have a bottom edge to have value. So knowing that that's the case, if this blue line stays high against the curve, I just keep buying into it. I like what I'm seeing. I want to be involved. If the blue line ends up dropping down through the curve and there's very, very little value in the curve, then obviously I've got to get rid of my bond at that position and sell bonds. So if I look at that as a storyline, if I look at that as a trade, I can obviously look at it against other parts of the curve to see if there's any other traders that fancy that value. So we can look at the 5s, 10s. If I look at the 5s, 10s, we can see again that this has even better value. We can see into the top edge, it's not as good. Into the bottom edge, it's 10 times better. You see the difference? So this one becomes about 10 times better because the amount of value I've got in that blue line is humongous. Absolutely humongous. The gold line's the 2s, 5s here. So we've just got the 2s, 5s, and now we've got the 5s, 10s on the charts. And then we can put the 10s, 30s on the charts as well. If I put the 10s, 30s on the charts, now I've got 3 different parts of the curve, Tim. I've got 3 different parts of the curve that tells me whether that yield is good. Whether that yield's good. So now that I've got 3 parts to the curve, this one is getting better and better and better and better. Do you agree with that? This one, yep, it's all right. We've got divergence on the 5s, 10s. We've got divergence on the 2s, 5s. We've got a massive divergence on the 10s, 30s. Massive divergence on the 10s, 30s. And as a result, we know we can sell into that. And the only way we can sell into the blue line is by buying bonds. I want that blue line. I do not want this blue line. It's terrible. I want to get rid of it. So I sell bonds massively at that point on the charts right there. This is a 5-minute chart. So if that's the case, if we now know what we're going to be doing in these, it's going to be the opposite to these arrows, right? It's going to be the opposite to these arrows. You can see that buy goes nowhere. That sell was brilliant. So we can see that this all makes perfect sense, can't we? But we go through this process to understand it. We go through the process to understand that when we buy and sell bonds, we're actually physically buying something. We're buying this blue line or selling this blue line. If I take it down into a very, very low term 1 minute chart just to see some scalp values, to see if it makes any more sense to people. If I look at the scalp value in this against the 2s, 5s, what value have I got right now? If I look at the 5s, 10s, what value have I got right now? If I look at the 10s, 30s, what value have I got right now? Well, at the moment, I don't really have any value. Would you buy this real yield, yes or no? Right now? Well, you might say against the 5s, 10s, these guys might buy it, and the guys that are on the 10s, 30s, they might buy it, but the guys that are on 2s, 5s, they're not interested just yet. They're not interested just yet on this deal. So one of the things that we can obviously understand is we've just got to let it run through the top edge. We've got to let it. We've got to try and build real money value in this. Now, obviously, if this trade starts to build, well, we can start seeing it. Like if this 2s, 5 starts coming back out against the 2s, the 5s, 10s, and the 10s, 30s, then we can obviously take a deal. We can take a deal. Until that happens, there's no trade for us, guys. No trade. So it's starting to show up just a little bit of an upturn just there. A little bit of a value trade, a little bit of reason to buy into this. I'm going to be watching that as an opportunity the next short while, guys. I'm just going to be watching that for a little cheeky opportunity. So what would we be doing? Well, obviously, if that pops up, I might fancy that. Now, obviously, bonds at the moment are running into highs. So you're obviously going to be looking at that and saying, well, before it ran into the highs, of course, you could have taken advantage of that little uptick. You've missed the trade now because you could have got in at 16s and 17s and it just traded 20s. It just traded 20s. So it's got to be fast, guys. It's one of those things you've got to look at and say, well, where's the reason? What's the reason I'm going to do this? Now, there's other reasons why you might buy a bond. You might be hedging against an equity position. That might be one of the reasons, but there's another stack of reasons why you may want to buy that real yield. Because it might be nothing to do with real yield. It might be something to do with the curve. It might be something to do with a hedge against equities. It might be something to do with an inflation hedge against oil. It doesn't always have to be about real yields, but obviously real yield is what you do when you buy an outright bond, is you buy into that story. So it's an important part of the jigsaw puzzle, isn't it?